Well, Donald Trump's apparent willingness to end the war on Iran without reopening the Strait of Hormuz sent a jolt through energy markets. Brent crude, the global benchmark for oil, shot upwards following Trump's speech, surging past $108 a barrel. That's a jump of $10 over the day before. Leading up to Wednesday's address, oil prices had eased on hopes that military operations could be over within weeks. The uncertainty surrounding the war in Iran has spooked investors and created turmoil on stock markets around the world. Let's take a closer look at this and bring in Ben Cahill. He's the Director for Energy Markets and Policy at the Center for Energy and Environmental Systems Analysis at the University of Texas at Austin. Ben, welcome. What was it that spooked markets about Trump's address?
It's good to be with you on the show. I think that the oil market was looking for a bit more clarity on when this conflict would end and how it would end, and specifically how the Strait of Hormuz would be reopened. And there were some mixed signals, of course, about whether or not the conflict would intensify or whether or not there was some diplomacy going on. And maybe the conflict could subside in the coming weeks. And the market didn't really see that in the speech. And so the reaction was pretty immediate. When the market opened in Asia last night, prices quickly moved upward. And I think the timing here is really significant because throughout the month of March, there were some buffers that provided a little bit of security to the market. There were strategic reserves that were released. There was a lot of oil that was in transit that had already loaded from the Strait of Hormuz before the conflict broke out. And I think the reason why you're seeing the market react this way is because we're now really entering a critical stage this month.
Yeah. Trump made the case in his speech that essentially what happened in the Strait of Hormuz was none of his business because that's not where the U.S. got their oil from. But that's now how the markets work, is it?
Well, it's a global market. So in the United States, gasoline and diesel prices reflect global market conditions, and therefore the Brent price. It's true that the United States is the world's largest oil producer. It's an enormous exporter of crude oil and petroleum products and natural gas liquids. But still, those product prices that Americans pay at the pump reflects what's going on in the rest of the world. Even though the United States is a huge oil exporter, it also remains an oil importer, especially to the east and west coast. So I think what we've seen over the last month is that consumers right around the world have been affected. What's becoming increasingly clear, though, I think, is that the burden is falling fastest and hardest on South Asia and Southeast Asia. These are the countries of the world where you're already seeing shortages, fuel rationing, calls by governments to have people work from home, emergency measures being put in place, whereas the wealthier countries in Europe and in the United States are a little bit more, let's say, protected from the immediate price surge. But I think over the course of this month, the scale of the loss in the Strait of Hormuz is so big that consumers right around the world will start to be affected and prices will increase.
Yeah, and that is why the UK convened a meeting today of around 40 countries to talk about the situation in the Strait. They called for the immediate and unconditional reopening of the Strait. Is that going to cut it?
It's difficult at this stage to know how the Strait of Hormuz will reopen. I think that meeting is an indication of the number of countries that are affected by this. I mean, this is a global issue. Typically before the war broke out, you'd have 100 ships transiting the Strait every day. Now it's a handful. So consumers right around the world, not just the major oil importers from the Middle East, but the major economies of the world are obviously affected by this. And I think what you've seen in recent weeks is that a number of countries have started to get a little bit more proactive, even reaching out to Iran directly. In the case of countries like Pakistan and China with proposals to bring this conflict to an end or to have exemptions for shipping. So certainly it's an indication that the stress is growing, that more countries want to open a channel of dialogue and be intermediaries. It's unclear how this is going to end. And of course, a lot of it depends on the course of the conflict in the weeks to come.
Yeah, because for Iran, this is an existential struggle, right? So what does the international community, all of them, of course, affected in one way, shape, or another, have to present to Iran an incentive to unblock the Strait of Hormuz, when this is really the biggest point of leverage they have in this conflict?
Well, that's correct. I mean, I think Iran's calculus here is to inflict maximum economic damage and chaos as long as it feels that existential threat, as long as the bombings continue. And that's why you've seen the attacks on critical energy infrastructure across the Gulf. And you've even seen Iran demanding payments, direct payments, or sort of toll booth structure, as people in the market are calling it, for ships to transit the strait. Until Iran feels that pressure goes away, I think it will be an implicit threat that they continue to do this. So a lot of countries around the world are looking for off-ramps to the conflict. And that depends on opening a channel of dialogue, I think, with Washington about what's next, and with Iran.
We often talk about Donald Trump reversing policy when he notices an adverse reaction on the markets. That is definitely what is occurring right now. So how much of his decision-making do you think is informed by market fallout in this case?
Well, I think a lot of market participants have been a bit puzzled that there hasn't been a bigger upward price movement so far in the crude oil price. It's true, according to that chart you showed, that the oil price neared $100 a barrel and $110 a barrel actually in the last day or so. That doesn't really tell the full story of stress in the market. I mean, we've seen soaring jet fuel prices in Asia, shortages of naphtha, of fertilizer, lots of products. And I think this is having a cumulative impact. It's starting to affect global supply chains and trade in a big way. And this is going to have an effect on stock market. It's going to have an effect certainly on energy prices in the United States. What a lot of people anticipate, I think, is that the market impact is really going to grow this month because we've essentially burned through all the buffers and the short-term emergency measures that are available. And as long as we have 10 million barrels a day plus of oil that is disrupted through the Strait of Hormuz, the toll on energy prices is expected to grow.
Ben Cahill of the University of Texas at Austin, we appreciate your time.